Today on the Gold Standard.
I would be very, very careful right now for people that are trying to hold on, hoping that things are going to come back. Investments can't be based on hope, Dave. It has to be based on fact. There's a right time and a right place for everything. And I just don't believe right now to pile money into stocks or to pile money into bonds or even real estate. I do not think that this is the right time to do so.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, it's a pleasure to join you again this week.
Yes, Dave, to safeguard your wealth. That's what we do. Nice to be with you.
Our topic today is an intriguing one: what Wall Street predicts for 2023. Ken, 2022 was the worst year for stocks since 2008's financial crisis. That's the assessment of the stock market after December 31st, the worst year for stocks since the 2008 financial crisis. So now, Wall Street is trying to get a feel for 2023. Will the new year punish investors further, or could there be some recovery for battered portfolios? What are you hearing?
Well, let's be honest, though, too, Dave. The stocks for 10 years did great. It's back to the old saying that trees grow high, but they don't grow to the sky. So it's just a matter of something goes up. It can't go up forever, especially when it's based on fake money. And that's what's important. When you print money out of thin air and when it's used to support the markets, eventually it's going to pop. And that's exactly what's going on. In 2023, it's already kicked off, Dave, on a down note. The S&P 500 is very volatile. It fell more than 19% last year, and NASDAQ was down even a lot more than that. Those are the stocks that move, the ones that people made a lot of money on. Apples and Amazons and Netflixes of the world continue to show a lot of weakness. That will continue, Dave. Like we've said, we're not anywhere near done with all of this. It was a huge bubble. It's the mother of all asset bubbles, and it's going to take a while for it to play out. And trillions of dollars was lost last year in wealth. And what's one thing that stockbrokers are not really talking about too much, of course, Dave, you turn on the television and all they tell you to do is buy the dip, and everything's going to be great and chillax and you're in for the long haul. Well, not everybody has the long haul in order to wait. So the typical 401k, Dave, last year shed $1 for every $5 deposited through the third quarter, wow, according to Fidelity. So, that's a 20% loss, $1 out of every $5 you put in your 401k. That's painful. And the Federal Reserve series of interest rate hikes to tame the highest inflation in 4 decades was a major factor causing stocks to tumble because of concerns over moves that have been made that have made it more expensive for businesses to borrow and for customers, Dave, to buy big ticket items like homes and cars. Obviously, everybody's feeling the pinch. I actually even read an article recently where they said the most affluent people in the world are now shopping at different places because, everybody is feeling it. But I think anybody who's worth 100 or 200 million or $1 billion, I think they're going to be okay. And the issue of higher interest rates, Dave, may cause inflation to ease a little year over year, but prices are not going back down to anywhere where they were 4 or 5 years ago. That's what everybody is being lied about. Inflation is not transitory. And although we may see the pace of inflation and flow may be lowered a little bit month over month, but prices are not going back down to where they were. Interest rates are making it more expensive for customers to borrow, to buy big ticket items. And that leads to major recessions. And I would say right now that many parts of the economy are already in a recession. Bonds and stocks are both very, very shaky, Dave, and both losing a lot of money. So it's kind of like a double whammy for investors. And not to mention, look at how many technology companies are laying off thousands and thousands of people. So this is all going to catch up, Dave, and we have a shortages of goods, and we have a lot more unemployed, it looks like, and we have a lot more higher costs for everything. But the bottom line is a lot of these companies are going to be experiencing much lower earnings, and earnings propel share prices. And that means that we should see, we don't have a crystal ball, and we don't really care what the stock market does. It can do whatever it wants. But in my opinion, there's a lot more pain to come for investors that invest in the paper markets like stocks and like bonds.
Ken, we're going to highlight the security of gold in just a minute, but first, could the stock market then continue to go low?
I think so, Dave. It's a factor of a couple of things. Number one, the Federal Reserve and the other central banks for a decade were printing out fake money and using it to boost up the markets. I remember back in 2020, the Federal Reserve Bank bought over 50% of the U.S. bonds and then just put them on their balance sheets. So a lot of the central banks of the world are printing money, lending it to governments, and then using that printed money to purchase these bonds and put them on their own balance sheets. So they have a nice little shell game going. It's a big Ponzi scheme, Dave. But I would quote what banks are saying regarding the 2023 markets, and this was according to Comerica Wealth Management. And it's an opinion. We have to take that all with a grain of salt and look at the writing on the wall and take it all in consideration. But they said, we are of the opinion that for a true low to be achieved, it must be successfully tested, thereby forming a double bottom. So, Dave, even though there were several bear market rallies last year, sharp rallies, which sucker people back in, and then it drops again, it doesn't mean that the market may not have truly tested its bottom yet, Dave. The group said in their report, for a classic double bottom to form, we look for the 3,500 range to act as the next level of support on the S&P 500. And
wow.
I think right now we're around 4,000. So that's a drop of 500 points. That's another 10-15%. That's pretty substantial for most investors out there, and that would mark another painful dip, another loss of a lot of wealth for investors. I know we're getting calls all the time from people that are saying, I'd like to stop the bleeding in my stock accounts. I want to stop the bleeding in my 401ks. I'm losing a lot of money. I want to hold on to some of what I have, and that's why you need to diversify. And gold is a perfect asset, Dave, to be diversifying into right now, especially since it's been going up in value. And other Wall Street experts, Dave, agree that more pain could be in store for early this year. JP Morgan is forecasting that the market will retest the lows of 2022 in the first half of 2023. So that's not that far away. And that's not good news for the value of investments out there, Dave, and for people's paper money, not to mention they're stealing our money through taxation and through inflation and through the devaluation of our paper money. So when you talk about all this stuff and investors, you have to make 10, 15, 20% a year to just keep up with what our money is losing and what the stock market and everything else is taking away from us. And that's a big hole to climb out of, especially when we're talking about 1 year, 2 years, 3 years in a row. And who knows how long this is going to go on for, Dave. We had such a large period. It was a boom of fake money, a boom of just enormous debt. And that's still going. But a lot of that was the cause for why stock prices and real estate prices and bond prices, because interest rates were so low for so long, it created a huge bubble. So that bubble, as you know, Dave, right now is popping.
A reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And our topic today is what Wall Street predicts for 2023. And that's going to bring us to the message of our program today. Over the past year, Ken, you have urged listeners to protect the value of their cash reserves and their investments by shifting a good portion of those over to the safety and the value of precious metals like gold and silver and platinum. So, Ken, in light of these forecasts of values continuing to drop, how does gold provide protection against such losses?
Well, it protects investors, Dave, in a couple of different ways. First of all, it protects your financial privacy and your financial freedom. Don't forget, we are going towards a digital dollar. Governor Newsom in California last week was talking about how excited he is about California being at the forefront of digital wallet technology, and they're going to start with driver's licenses. And he's very excited. I don't know. I'm not
Wow.
excited about it.
Wow.
Are you excited about it, Dave?
No.
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 And I'm sure that other states are going to follow. I was actually reading an article the other day. They said that Scottsdale, Arizona, they're almost out of water. So there's a lot of stuff going on. It's going to affect people, but gold holds your value when it comes to lost purchasing power, Dave. That's what it does. It also provides diversification. So if you're an investor and you don't want to have all of your money in a market that's going to be monitored, or if you're an investor and you don't want to have all of your money in a market that's going to be under surveillance in a digital wallet, now's the time to get some of it out of the bank or out of the markets and into the privacy of gold. Not to mention gold, I think 5 or 10 years from now could be $5,000 or $10,000 per ounce. It's approaching its all-time highs of a little over $2,000. I think we'll see that sometime this year pretty easily. And I think the dollar will continue to fall. And in that relationship, Dave, gold will reflect in value what the dollar loses by showing a higher price. Remember, you used to be able to put $35 and own an ounce of gold. Now it takes over $2,000 to own an ounce of gold. And I think that will continue to widen that gap as our paper money and our paper investments continue to lose significant buying power, Dave. And gold and silver make up for that and hold on to your buying power and your privacy.
We're going to continue our topic, what Wall Street predicts for 2023, a little later in the program, and we'll highlight several tangible ways to convert your wealth into the security of gold. But first, a reminder that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And coming up, we're going to take a look at a specific precious metal that you can use to safeguard your wealth, and that's coming up right after this.
Looking ahead, you don't want to get several months into the new year and say, I wish I would have after a stock market meltdown. Sebastian Gorka here. You can start the year by securing the value of your cash reserves and investments, guarding them against what many are predicting will be a brutal year for the value of the dollar and a stock market meltdown. The economic signs are worrisome. I recommend calling Midas Gold Group to safeguard your wealth with the stability of gold. Gold holds its value when economies fail. With stocks and bonds crashing over 20% in 2022, gold has held its value. Those who converted to gold with Midas Gold Group created a hedge against the ravages of inflation. Go to MidasGoldGroup.com, or better yet, call 855-322-GOLD. That's 855-322-GOLD. It's gold you can hold. Call right now, 855-322-GOLD, or go to MidasGoldGroup.com.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is what Wall Street predicts for 2023. By the way, if you live in the Los Angeles or Phoenix area, you can actually come and visit our local office to meet with us in person. For the address and the directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. For those of you listening in other cities, just call us directly at 855-322-GOLD, 855-322-GOLD, by the numbers 855-322-4653. Now, it's time for our precious metal spotlight of the week, and today, Ken, let's talk about the gold Britannia. This is one that I have, and I think it's a very interesting gold coin, sort of Great Britain's version of our own American gold eagle, isn't it?
I think that's a good description of this coin, Dave. Like the gold American eagle that has an image of walking liberty, standing proud on the front of the coin. The British gold Britannia has a depiction of Britannia standing firm against a strong gale of wind. You might be interested to know, Dave, that Britannia's image has appeared as a symbol of Britain's strength on coinage since the Roman times.
So it has quite a history, doesn't it?
Yeah, it does. And I was actually showing this coin to some investors yesterday that came in, and I love the gold Britannia. I mean, I don't like really Great Britain or what they stand for, or the royal family. I'm not into any of that stuff. But this is really it's a great coin, and it was first introduced by the British Royal Mint in 1987. Dave actually was a senior in high school then, and was Europe's first gold bullion investment coin. The gold Britannia coins are the flagship of British bullion coins issued by the Royal Mint. the Royal Mint enjoys the distinction of being the world's oldest mint. A lot of these governments, Dave, I really don't care for how they handle things or the people who run them, but I got to be honest with you, the mints make really, really beautiful coins, whether if it's the UK mint or the Canadian mint or the US mint or even the Australian mint. I really, really think that these coins, people should be proud of them. And it creates a legacy. It's your nest egg that you're handing down in most cases to kids or relatives or friends. It's something that you should be proud of. This particular coin, Dave, it's 1 troy ounce of 24 karat pure gold. It features the familiar portrayal of Goddess Britannia, the grand lady warrior of resilience and strength. On its reversed, her robe, Dave, billows in the wind and the strong sea winds as she stands upright against the wind, firmly holding a trident spear while carrying in the other hand a shield and an olive branch. The obverse, or the head side, Dave, features the most current portrait of Queen Elizabeth II from 2016, and everybody knows that Queen Elizabeth passed. So that means, of course, that her portrait will soon give way to King Charles' image, making the Elizabeth versions a bit more rare. I should also mention, Dave, for our silver investors out there or people who like to diversify in silver, that the Gold Britannia's grand 10th anniversary celebration, the series got a silver counterpart coin as well. And I was actually looking at these with an investor yesterday, and they decided to diversify into gold and silver, and the gold and silver British Britannia were some of the products that they chose to do so with. And I would say that both of these gold and silver coins, Dave, are very, very popular worldwide. I would say that either in your own possession, Dave, or in your IRA, the gold Britannia coin would be a magnificent addition to any bullion gold and silver collector that wants to diversify, that wants to get some money out of the banking system or stop the bleeding in their retirement accounts. And they're asking themselves what products that I can consider in gold and silver to do that, and the gold Britannia and the silver Britannia would be a coin, Dave, that I would highly recommend.
And I know from what you've said that Midas Gold Group keeps regular inventory of the Britannia. So, Ken, thank you so much for that. Coming up in a moment, we're going to continue our topic of what Wall Street predicts for 2023 with Ken Russo from Midas Gold Group, and that's coming up right after this.
2023 is going to be a year of economic upheaval, according to many economists. Sebastian Gorka here. Financial experts are warning of massive layoffs and huge stock market losses, which is why I recommend calling Midas Gold Group to safeguard your wealth with the stability of gold while you can. Gold holds its value when economies fail. Go to MidasGoldGroup.com, or better yet, call 855-322-GOLD. It's gold you can hold. Call 855-322-GOLD.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is what Wall Street predicts for 2023. As we have been saying, if you live in the Los Angeles or Phoenix area, we actually encourage you to visit our local office and come meet with us in person. That's what Ken was doing yesterday with some investors. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers, if you want to write that down, 855-322-4653. Now, let's return to our topic. Ken, how would a recession impact the stock market?
Well, I mean, we don't want to get too intricate here, Dave. You know, most people listening today, I mean, they're just looking for different ways to diversify. You know, we're not here to provide financial advice that nobody understands, of course, or any financial advice at all. But let me just say this. Economists think that the U.S. could enter a severe recession this year, although its severity would depend on different things. And obviously it's up for debate. If we do indeed, Dave, have a recession, it's going to impact the stock market for sure, because it's going to hurt corporate profits. And we mentioned that before. If the economy is not strong, corporate profits are going to suffer. And I think that that's inevitable. And we're starting to see a lot of big companies talk about that. And that's not going to just go away or improve anytime soon. If the U.S. enters a deep recession, Dave, S&P profits for those 500 companies, which are a barometer, they could decline sharply, meaning that the S&P can tumble to 3,000 pretty easily. The Dow right now, it can tumble to 20, 25,000. That would be a lot of loss of wealth, and more importantly, retirement stability, not to mention just a lot of loss of purchasing power. So I would be very, very careful right now for people that are trying to hold on, hoping that things are going to come back. Investments can't be based on hope, Dave. It has to be based on fact. There's a right time and a right place for everything. And I just don't believe right now to pile money into stocks or to pile money into bonds or even real estate. I do not think that this is the right time to do so.
Ken, what you've described as very possible as regards Wall Street, that has not happened with gold, nor is it forecast to happen, right?
No, and anything could be manipulated in a short period of time. I think the gold price has been suppressed and manipulated by banks, Dave, especially in the last couple of years through the paper markets. I think that gold would already be over $3,000 per ounce if they didn't do so. But the banking system is trying to do whatever they can to keep people involved and keep their paper money in the banking system. If people take their money out of the banking system, Dave, the whole thing falls apart. And in my opinion, that's inevitable. We all know there's not enough money for everybody at the bank if we all showed up and demanded our deposits. It's not anywhere close. But gold holds its value, Dave. It's basically been flat the last couple of years after being up 19% in 2019 and 25% in 2020. And every market needs to rest before it makes that next move higher. I think we're in that midst right now, Dave, of seeing a lower dollar price this year, lower purchasing power for all paper currencies. All paper currencies are toilet paper. We all know that, Dave. And most investors are very fearful that they could lose tremendous value over the next few years. No one's sure what their dollar is going to buy or what it's even going to be worth. So it's imperative that people understand the loss of purchasing power from paper money will be reflected in a higher gold price. And in my opinion, gold should be anywhere from $5,000 to $10,000 in the next 5 or 10 years because the dollar and other fiat paper currencies backed by nothing, currencies that they can just print out of thin air through the stroke of a computer key or the click of a computer mouse, that is going to continue to lose tremendous buying power. And the price of gold will reflect that at a much higher value, Dave.
So to summarize, investments have taken a big hit, and the Fed is destroying the value of U.S. bonds and the U.S. dollar. And again, gold would seem to fare very well in the midst of all of this. So I will say it again. That is why I have moved a good portion of my savings and investments to physical gold and silver and into a gold IRA with the guidance of you at Midas Gold Group. My family is a lot more secure financially because of that. So, Ken, thank you. Thank you so much.
Yeah, and you don't want to be financially destroyed, Dave, when we go through the next crisis. And the next crisis is right around the corner. And the ownership of substantial gold and silver will allow you to escape the carnage pretty much unscathed. And it's our pleasure. It's what we do, Dave. Nice to talk to you again. But I hope people are listening that we're far from done here. And we have a lot more to go. So people, be vigilant when it comes to your money.
That is going to bring us to the end of our time together today here on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you for your time again today.
Nice to talk to you, Dave.
I'm Dave Dino. I hope you'll come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.